Hey, what's up? It's John. Today we're going to be talking about the final T account in this series of LearnDebitsAndCredits.com video series, video course. Subscribe below. So now we're talking about expense transactions. So expenses increase with a debit. Just memorize it. Nothing else you can do. Expenses increase with a debit. Little jingle for revenues and expenses is I got revenue credits, expenses as debits. Got that? Revenue credits, expenses as debits. Now, expenses, things like the internet, employees, for general things, are constantly going to be increasing with the debit. Debit expense, debit expense, debit expense, debit expense, just like so. If you haven't already, get your ebook content so you can follow along, print out worksheets. Now let's get right into expenses. All right, so here we are at the Learn Debits and Credits ebook. And I'm going to go ahead and just pull up a simple little diagram. This is also on the app, Accounting Play, Learn Debits and Credits for iOS. It's a game that makes this a lot more fun. But here, we're talking about general expenses. Selling, general, administrative, interest, repairs, depreciation, amortization, meals and entertainment, office supplies, postage. Now, there are certain things that might seem like an expense, but are not expenses. Assets are not expenses. Cars are not expenses. Buildings are not expenses. Now, there's also a lot of other things that get a little bit more technical, but just know that the difference between an expense and an asset is significant. Debit an expense in order to increase the expense account. So you're constantly debiting unless there's a return or something strange or correction of an error. Now we're on a final T account, expense, where we increase with a debit and reduce with a credit. Got revenue credits, expenses as debits. So let's hop right into Mr. T account. We're only talking about the one T. Transactions always have two in actuality, but this is strictly academic. So wage expense. This is not a factory worker, this is just a general wage expense. So we're increasing. We have $32,000 of expense here. So we are going to debit expense to increase. Debit expense $8,000 to increase. Debit expense $7,000 to increase. Debit expense $8,000 to increase. Debit expense $9,000 to increase. Sounds like an auction. Hey, debit expense, because that's how it is. We're debiting expense up. We got that? Good. Awesome. Let's see what we come up with. $32,000. Not bad. Put a little line there. So these transactions, wage expense. Forgetting about the other half of it, it's just going up. Let's talk about internet expense. This is just a period cost, something that just goes out. So we're increasing expense with a debit. Let's line this up for you. Increasing expense with a debit, increasing expense with a debit. Decrease, what? What's happening? Well, let's say they screwed up on the billing. I won't say which internet provider in my San Francisco neighborhood that screwed up on mine, but we're going to go ahead and decrease it with a credit. So this is a correction of an error probably, or a credit on the bill. So the effective expense was reduced. Now, bill comes in again, approximately per normal for the business. Let's go ahead and sum these up, see where we're at. So we have our sum of our debits, which increased expense, and the one credit, which is a decrease, probably due to some kind of refund or error. So final is the debit and the credit. $1,550 is your final balance. So again, expense is a component of the income statement. Income minus expense is going to flow into equity. But we're not even there yet. We're just talking about increases and decreases in this expense account, which is right here, okay? So that pretty much wraps it up for learndebitsandcredits.com. I'm John at accountingplay.com. Email me. You can get the premium video course, the apps, whatever's going to help you. Or there's also podcasts. You can piece together a lot of this information for free if you're really on a budget. But if you're making money, time is money. Get the premium materials. Pop, get through it. So just concluding on expenses, it's the fifth and final account. Expenses increase with a debit. They're on the income statement. Revenue minus expenses, more or less, profit or loss. So this concludes the section of single T accounts. You can find in the ebook, you can actually just get it right on your iPad and flip around from here. But these transactions we've been going over are what I call Mr. T. And so there are templates which will help you out. This is the 2T account template. We're going to get right into that shortly. But I just want to thank you for getting this far. And debits and credits, it's not that it's hard, it just takes time, patience, practice in going over really simplified problems. Because in class when you're working through these problems, you're not just saying increase expense $10, they're giving you all this other information. And it might not just be expense, it might say selling general administration, or it might say depreciation. So you need to know the account titles, and then say, okay, classify it, that's an expense, and then how to increase and decrease debits and credits, right? On the income statement, we'll go ahead and do revenue credits, expenses as debits. On the balance sheet, we just start with cash. Debit cash up, credit down, other side now, flip around. Okay? The other side would be the equity and liabilities, which are opposite of assets. Commit to memory, commit the images, get the app so you can do this on the go. You can listen, you can do it in the bus, you can play the debits and credits game wherever. Don't even want to know where you're playing that. But I just really appreciate you making this far. And please subscribe and let me know what I'm doing, how I'm doing, and how I can make it better for you. Thanks so much.